Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so today we're diving into something pretty fascinating and I think really relevant for anyone following the world of private equity. We're talking about first-time fund managers, right? Those folks trying to launch their own funds, but with a specific twist.
Yeah.
We're zeroing in on the lower middle market, that segment of the market that's often overlooked. But, well, as we'll see, it's definitely catching a lot of attention these days.
It is.
And we've been digging through some expert opinions and industry articles, trying to understand what it really takes to get a fund off the ground in this space right now.
Right.
And more importantly, maybe, is why the lower middle market is suddenly becoming this, well, I don't know, almost a hotbed of activity, both for fund managers and the investors looking to back them. So that's our mission today, really, to figure out what's making this specific part of the market so compelling right now.
Absolutely, yeah. And I think what's really striking is, having had a chance to go through all this material, right? The picture that emerges is, well, it's both challenging and incredibly promising. I mean, starting a fund is never a walk in the park.
Right.
But there are some very real signals pointing to some really interesting opportunities, particularly when you narrow your focus to that lower middle market.
Okay, so, let's just get right to it.
Yeah.
Is this actually a good time to be, someone out there thinking, hey, I want to launch my own fund?
Right. Because
one quote we kept coming across, and it really resonated with me, is this idea that there's never an easy time to do it.
Oh, absolutely.
Launch a first-time fund.
Yeah. No, that's absolutely true. And it's crucial to acknowledge that right off the bat.
Yeah.
Fundraising, especially for a first-time fund, is almost always a tough, a tough battle. But what's really interesting is what's happening beneath the surface.
Right.
We're seeing a definite increase in the amount of capital being directed towards emerging managers.
That's what's encouraging, right? It's
Which is.
Yeah, there's a lot of, chatter about how difficult it is.
Yeah.
But then at the same time, you're seeing these pools of capital sort of emerging.
Yeah,
absolutely. Saying, hey, we want to invest in new managers.
Exactly.
And it sounds like a big part of that is driven by, investors, these big institutional investors, the LPs. They're always under pressure to find those strong returns.
Yeah.
Right. And they're looking at, managers focused on the middle market.
Right.
And even more so, I think, for today's conversation.
Yeah.
The lower middle market as a place where they might be able to get that, that kind of significant growth that they're looking for.
Yeah, absolutely. And James Windsor, over at Campbell Lutyens, he put it really well, I thought. He said, while fundraising is, it has its difficulties, he's seeing that high-quality new managers with a strong track record are seeing interest from investors.
That strong track record part, though.
Yeah.
That's key, isn't it?
It is.
Because what does that actually mean?
Right.
Beyond just saying, oh, look, I've done a bunch of deals.
Right.
What are the LPs really digging into there?
Yeah, no, that's the million-dollar question.
It is.
I think particularly because if you think about managers who are, spinning out from these larger, more established firms,
right,
proving their individual impact within those past deals,
right,
it can get pretty complex. Like, who actually gets the credit for what,
Exactly.
It's not always a clear-cut thing.
No.
And I think this is where John McCormick, from Monument Group, makes a really insightful point about what he calls the connectivity of talent.
Okay.
Right? So it's not just about how many deals you've done. It's about the LPs wanting to see that the team, the core team that's starting this fund, they've got a history of working together effectively.
Yeah.
It's almost like they're saying, don't just tell me you've done good deals.
Right.
Show me a deal that you all have done together.
Right.
And what were your specific roles? What did each of you bring to the table?
Right.
That established working relationship, that's what really provides that, a level of comfort for investors.
I see.
It's like a de-risking.
It makes perfect sense.
Right.
Yeah.
Because, a stellar individual track record is one thing.
Right.
But proving that you can execute consistently
As a team.
as a newly formed team,
Right.
that's a whole other hurdle.
Yeah, that's a whole other level. And the example of Palm Peak Capital, I thought, really illustrates this well.
Yeah,
right?
yeah.
You have a team spinning out from Sun Capital, and the fact that the co-CEOs of their former firm
Right.
actually backed them early on.
Right.
Give
them that.
It wasn't just about their past deals.
Right.
It was about the validation.
The validation
From these people who had worked with them.
for people who knew their work intimately.
Right, exactly. And knew how they worked together.
Yeah, exactly.
And that sent a signal, I think, to the wider LP community.
Oh, absolutely.
Right.
That early backing, that's huge, right?
That's huge.
Because it's not just about the money, it's about
that credibility.
the credibility. And,
Yeah.
McCormick also pointed out something really interesting. He said, even securing like one successful deal early on in the life of the fund
Yeah.
can be a real turning point because it provides that tangible evidence
Yeah.
of what the new team can achieve.
Proof.
Right.
That they can actually do it.
They can do it on their own.
So it's not just about the track record from before.
Right.
It's about
What can you do?
what can you do now as
Yeah.
this new entity.
Exactly.
Yeah.
And I think, what's really fascinating here is, despite these challenges that we've been talking about, right? Fundraising,
Yeah.
right? You're seeing this convergence of factors that's actually creating a more, fertile ground
It does seem that way.
for those who can really demonstrate that track record, that team dynamic.
And Monica Aurora, from Proskauer, she made the point that there are increased levels of capital
Right.
and more investors who are looking to seed new funds.
That's right.
So the appetite seems to be there,
It is.
but the bar for entry is still really high.
Absolutely, yeah. The bar is definitely high. And I think what's also really interesting is the investor landscape itself is maturing,
Okay.
right? So the LPs, they're not just, throwing money at anyone anymore.
Right.
They're conducting much more sophisticated due diligence. They're really digging deep to understand the individuals behind these funds, right?
Yeah.
It's a much more thorough vetting process. And I think that deeper scrutiny combined with, the innovations we're seeing in fund structures,
Yeah.
the evolution of the industry itself,
Right.
it's creating more pathways, I think, for first-time fund managers who have, that compelling story, that demonstrable expertise.
They can really differentiate themselves.
Exactly.
Yeah. Okay. So let's really drill down into the lower middle market aspect of this.
Okay.
Because, David Fan from VSS, he makes a really critical observation, I think.
Yeah.
He says that fund performance in this segment, it's much more variable
Okay.
compared to other areas of private equity, right?
Yeah.
So it's not as, I guess, predictable
Right.
in terms of, what kind of returns you might see.
Right.
So choosing the right manager
Oh, it becomes absolutely crucial.
in this space is even more important, it seems.
Yes, it is. Yeah.
Because, you could pick a winner, you could pick,
Right. Exactly.
someone who doesn't quite perform as well.
Right. That spread, that wider spread in performance.
Yeah.
It really highlights the unique nature of this part of the market,
It does.
And I think John McCormick, again, he said it really well when he said that you can't use the same hammer on the lower middle market the same way you can with larger companies because
Yeah.
they're just more fragile,
Yeah.
These aren't these large, highly institutionalized businesses with deep management benches, right?
Right.
They often require a much more hands-on operational approach
Yeah.
from the fund managers. It's a different ball game altogether.
It is. And
Yeah.
and it sounds like the managers who are successful in this space, they need almost this blend, right?
Yeah.
Of financial expertise, but also really strong operational and interpersonal skills.
Oh, absolutely, yeah.
Because you're working so closely with these management teams that are already in a place.
Exactly.
You can't just come in and, with your MBA
Right.
and say, well, this is how we do it, at the big firm.
Right. It's a totally different approach,
Yeah. And it's interesting because
Yeah.
despite these inherent challenges, right? We've talked about the fundraising challenges. We've talked about,
Right.
the need for this really specific skill set.
Yeah.
This lower middle market. It's
Right.
really attracting investors.
It is. It is.
Why is that? What's the pull?
Yeah, well, I mean, I think a major magnet is the potential for growth, right?
Right.
Yeah.
There are simply more deal opportunities
Why?
with significant upside potential
Right.
compared to, investing in larger, more mature companies where that growth can be harder to find.
Okay. Yeah.
And Fan, he highlighted that, for a lot of LPs, the lower middle market, it remains a relatively untapped area in their portfolios,
Yeah.
I see it as a frontier
Right.
with more room to run,
Yeah. And less crowded, I guess, too, right?
Absolutely, yeah. It's less heavily trafficked, I think, by those really large private equity firms,
Right.
the mega funds.
Right.
And that means that GPs in the lower middle market, they often benefit from what's known as proprietary deal flow.
Yeah.
These are investment opportunities that aren't widely marketed. They're
Right.
not on everyone's radar screen. And they're often sourced through the manager's unique network,
Yeah.
maybe
Yeah.
their specific industry focus. So it gives them that competitive advantage.
Right.
They're not competing with everyone else for the same deals.
And they can add value, right?
Oh, absolutely.
By sort of professionalizing.
Yeah, by bringing in,
Bringing in those systems.
better systems, processes, talent,
Upgrading the management teams.
Exactly.
And then they can also do these tuck-in acquisitions, right?
Oh, yeah, absolutely.
To kind of fuel that growth even further.
Right. And create those synergies that can really boost returns.
And then, McCormick mentioned the law of small numbers, which I thought was interesting. This idea that...
Right. That getting those really outsized returns, 4 or 5 times your initial investment.
Right.
It's often more feasible with these smaller deals in this segment because with a much larger transaction, getting those kinds of multiples, it becomes exponentially harder,
It does, yeah.
You're dealing with, completely different.
Yeah, it's a different scale.
Yeah, different dynamics.
Yeah.
So there's a real opportunity there.
For those GPs.
For the GPs.
To really generate those significant returns.
Yeah.
Right.
And the opportunity to, significantly increase a company's EBITDA, right? Their earnings.
Right.
Within a few years.
Yeah.
And then sell it to a larger, more efficient market, right?
Right.
That creates this really compelling return arbitrage, right?
Right.
You're buying at one valuation in a less efficient market, and then you're selling at a higher valuation in a more liquid market.
I see. So it's like you're playing the
You're playing the market dynamic.
market dynamics in a way.
Yeah, exactly.
Right.
And plus, in certain sectors within the lower middle market, there's just a larger universe of companies to choose from, which provides more optionality for the GPs.
Right. So more to pick from potentially.
Exactly.
Yeah. So.
And speaking of sectors,
Right.
it sounds like even within this lower middle market, there are certain areas that are really
absolutely
catching investors' attention.
Yeah.
And Jared Davidson from Asante Capital,
Right.
he pointed out that technology and healthcare, they consistently rank as the top sectors of interest, right, for those LPs who are backing these emerging managers in this space.
Yeah, and that aligns, with what we're seeing in the broader investment landscape, right?
Yeah.
I mean, there's this renewed enthusiasm around technology,
Yeah.
particularly areas like AI and data centers,
Yeah.
right? While healthcare, particularly pharmaceuticals, medical technology,
Right.
that continues to be a sector
Yeah.
with consistently high demand
Yeah.
and perceived resilience, right?
Okay. So looking ahead then.
What's the general feeling about,
Yeah.
what are the prospects for these emerging managers who are focused on this lower middle market?
Yeah, I mean, I think the general feeling is, cautiously optimistic, I would say.
Right, yeah.
The expectation is that private equity returns more broadly will begin to normalize towards the end of 2025.
Okay.
And this could actually create a more constructive fundraising environment.
For emerging managers.
For emerging managers, exactly.
Because then LPs will be looking for...
They'll be looking for new sources of alpha.
Right.
Yeah, right.
Exactly.
And the fact that we've seen, inflation subside,
Right.
interest rates stabilizing, even declining,
Right.
that's led to greater alignment in price expectations between buyers and sellers,
Yeah.
which is already fueling increased M&A activity.
Right. So more deals happening.
More deals, exactly.
Which then leads to more...
Exits, right?
For the existing funds, right?
Right. Which then puts more capital
right back in the hands of the LP.
back into the hands of the LPs,
Yeah.
who can then look to reinvest.
It's almost a
Yeah.
positive feedback loop,
It is.
isn't it?
Yeah, absolutely.
Okay, so
Yeah.
to kind of sum all this up,
Yeah.
John McCormick's closing thought I thought was really telling.
Oh, yeah.
He said, the flavor of the day remains the lower middle market.
Yeah, it does. It does.
And that speaks volumes, right?
It really does. Yeah.
About the sentiment and, where the opportunities are.
Where the opportunities are.
So
Yeah.
to recap, right, launching a first-time fund,
Yeah.
it's hard.
It's challenging.
It's challenging. It's not easy,
No.
especially in the lower middle market with these,
Yeah.
unique nuances that we've talked about.
Yeah.
But there is significant investor interest.
There is. Yeah.
And it's growing, right?
It's growing
Because of that potential
for returns. Yeah.
for stronger returns, more deal opportunities,
Right.
and the characteristic
The unique characteristics
of these smaller,
Yeah, the smaller businesses, the less institutionalized businesses
Right.
that need that.
the operational expertise.
It's a special touch.
Yeah, exactly.
And I think what really stood out to me
Yeah.
was just the importance of that track record, right?
Well, that's a paramount.
That demonstrable, relevant track record.
It's not just any track record. It has to be relevant.
It has to be relevant.
Yeah.
A cohesive team
Yeah.
with a history.
The history of working together, right?
Working together, yeah.
So that they can hit the ground running.
Right.
And often that deep specialized expertise
Yeah.
in sectors like technology and healthcare.
Because those are hot.
Those are hot.
Right.
Yeah, those are the areas where the investors are really, focused right now.
Exactly. So lower middle market.
Compelling.
It's compelling.
It's dynamic.
It's dynamic.
A lot going on. But you gotta
know what you're doing.
know what you're doing.
You got to have the right team, the right expertise.
Yeah, and on that note, here's something for our listeners to think about.
Okay.
Given this heightened focus
Yeah.
on the lower middle market
Right.
and this need for specialized knowledge, operational acumen, all that,
Right.
what really innovative strategies
Yeah.
might these new fund managers develop
Yeah. Right.
to not only secure that initial funding,
Right. Which is tough.
which is tough, but also to actually demonstrate,
Sustainable value creation.
right, that they can create value
Yeah.
in this landscape that's becoming,
Increasingly competitive.
increasingly competitive,
Yeah.
right?
Yeah.
So think about how these fundraising dynamics connect with the broader trends we're seeing in investments
Absolutely.
and economic growth.
Yeah.
So thanks for taking the deep dive with us.
Of course. Always a pleasure.
All right. We'll see you next time.
Sounds good.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.